support and resistance, why most levels fail and how to understand them properly. This single concept alone fixes overtrading, false entries, and emotional exits. Why this concept matters now? Support and resistance are the first things every trader learns. And the first things most traders misunderstand. Almost every retail trader draws perfect horizontal lines and still gets stopped out repeatedly. Why? Because support and resistance are not lines. They are zones of human behavior. If you understand this properly, you stop blaming the market and start reading it clearly. Today's episode will permanently change how you see charts, without indicators, tips, or predictions. A relatable trader problem. Let's be honest. You mark a clean support level. Price comes near it. You buy confidently. And then, price breaks the support, hits your stop loss, and immediately reverses upward. You feel cheated. Then you think, support doesn't work. Markets are manipulated. Technical analysis is useless. The truth is simpler. Support worked, but your understanding didn't. This episode exists to fix that misunderstanding forever. How support and resistance really work. To visualize what we are discussing, imagine these chart structures. Let's break this down slowly. Retail traders draw exact price lines. Professional traders observe price areas. Why? Because orders are not placed at one price. Institutions accumulate in ranges. Liquidity exists in zones. When price enters a support zone, reactions may happen anywhere inside it. If you expect reversal from one exact level, disappointment is guaranteed. Why price breaks support, then reverses? This is the most painful trap. Price enters support zone. Breaks slightly below. Triggers stop losses. Collects liquidity. Reverses sharply upward. This is not manipulation. This is liquidity mechanics. Support didn't fail. Weak hands did. Resistance is not always rejection. Strong markets don't reject resistance violently. They pause, absorb supply, and continue. If price reaches resistance and candles get smaller, volatility reduces, wicks shorten. That is absorption, not weakness. Market psychology behind support and resistance. Support and resistance are memory zones. At support, trapped sellers want exit. Buyers look for value. Institutions accumulate quietly. Fear is high. Decisions are emotional. At resistance, early buyers book profits. Late buyers hesitate. Smart money distributes. Greed and hesitation coexist. Why fake breakdowns exist? Markets need participation to move. Breaking support creates panic selling. Provides liquidity. Allows strong players to build positions. Understanding this psychology prevents emotional reactions. Common mistakes traders make. Mistake 1. Treating levels as exact prices. Markets don't respect rulers, they respect behavior. Mistake 2. Buying or selling blindly at the level. Levels are decision zones, not automatic entries. Mistake 3. Ignoring time spent at the level. More time is equal to more importance. Mistake 4. Not checking higher time frames. A support on 5 minutes may be meaningless against daily resistance. Mistake 5. Assuming every break is real. Most first breaks are tests, not trend changes. How to understand or apply it? Education only. This is an educational framework, not advice. The 3-step support and resistance understanding model. Step 1. Identify the zone, not the line. Mark candle bodies. Repeated reactions. Consolidation areas. Ignore single wicks. Step 2. Observe price behavior inside the zone. Ask: are candles shrinking? Absorption. Are wicks increasing? Rejection. Is volume rising or falling? Price behavior matters more than the level itself. Step 3. Watch the exit from the zone. Strong move away from the zone is equal to acceptance. Slow drift or whipsaw is equal to uncertainty. Acceptance tells you who won the battle. Support becoming resistance, and vice versa. This is not magic, it's psychology. Buyers at support become sellers when trapped. Old resistance becomes confidence for buyers. Markets remember pain. Multi-time frame importance. A level is strongest when visible on daily, respected on hourly, reacted to on 15 minutes. Alignment increases relevance, not certainty. Support and resistance are context tools. They are not signals. They help you understand location, measure risk environment, avoid chasing price. They do not tell you what to buy or sell. Support and resistance are not about drawing lines. They are about understanding where decisions happen. When traders stop treating levels as magical prices and start reading price behavior inside zones, clarity replaces confusion. Tomorrow, in the Sunday Weekly India Market Outlook, we'll apply this understanding to Nifty and Bank Nifty, identifying key decision zones for the coming week from a purely educational perspective. See you tomorrow.